What's cracking, investors? Today, let me do a mic check real quick. Okay, I want to talk about the importance of exotic option strategies and what the hell is an exotic option strategy, first of all. Well, it's an option strategy that's outside of the realm of the well-known strategies. Okay, so it's not like a credit bull spread or a debit call spread or whatever. It's not an iron condor. It's not a butterfly of any kind. It's not a diagonal spread. It's that thing where if you're in your brokerage account and you play around with the options wheel, it says custom. It's what an exotic strategy is. But some of them can actually be pretty good. And I actually have an example that I've built for you. But first, I want to talk briefly about why it's important to have the ability to develop your own exotic strategies. And as I mentioned in another video before, the reason why so many strategies exist and is expression. So as an options trader, you need to, or any kind of trader really, you need to be able to you need to be able to build an accurate expression of what you're trying to do in the markets. So let's say, you think such and such is going to happen. You need to not only have the idea, but you also need to have the ability to express that accurately in the markets. And there's no better tool than the options market to express accurately what you're trying to accomplish. So that is the importance of exotic strategies, or all kinds of strategies. Now I have an example for you here of an exotic strategy that I was just playing around with and built on my account, and I'll show it to you right now. Oh, that's dark screen. That's not the option strategy, but this is. Okay. So this is an attempt of some kind of a mixed bag diagonal spread, but it's definitely a very custom, and you can see how weird the payout window is here on the right. Yeah, you can see this. So this strategy, for example, has a break even of 151.6, and then everything above that is profitable, but it doesn't look very normal, does it? It's pretty strange. So what happens with the strategy is under $151.6 strike price on Apple, I started incurring a loss. Okay, so at 150.44 I have a $20 loss, and at 148 I have $44 loss, and it tapers off to 60. All right, at zero. Okay, if Apple goes down to zero, the maximum amount I'm going to lose is 60, but it tapers off, so I'm never going to get to that amount anyway. All right, but and the important thing is after 151.6, 151.60, everything above that is basically pure profit from here in this example, in this custom trade. Maybe I should come up with this strategy and make a name for it, all right? But look how it peaks in around 155 level at $124 payout. So if Apple ends at 155 next week, it's gonna basically double the amount of money that I put down. See the cost over here, it says $60, or it's 60 cents times 100 is $60, which is what the maximum loss is on the strategy. But I could double it if it ends at 155. But even if I don't hit that exact number, it's going to taper off a little bit. And the smallest amount I can do if it goes above that number is like $36. Okay. So that's the minimum that I'll win if Apple decides to have a really big bull run. And if it decides to have an enormous bull run, I'm still going to profit a little bit and earn, right? As Apple is having this incredible upwards breakout. So at 164, for example, I'm going to be winning $228. So you're still not giving away the upside optionality, right, of the stock. And yet you're really minimizing the downside risk. I mean, that sounds wonderful, doesn't it? It's pretty good. So especially if you're a little bit bullish on the stock, you're giving yourself a little bit of downward play. So up until 151.60, the price of the stock, the price of the stock, I can English, is 152.59 right now. So if it goes down I'm still gonna be able to profit. If it goes down to 152, I'm still gonna make $14. You see, normally when you buy, let's say I just buy a straight call, I just buy one call option. The price of the stock would have to rise significantly above the strike price of that call option in order for me to make money. But with this strat, that's not the case. The stock can go down a little bit and I'll still be in the green. You see what I mean? Okay, so how do I build the strategy? Well, it says it's listed up here. All right, it's listed up here. 154, 155 call sell at February 24th expiration date. 157.5 buy on March, and then another buy at 160, okay, in March 3rd as well. Okay, so if you want to build it, you go over here, you pick your date, February 24th, you sell a call at 155 right here. Okay, you see that? I sell a call, and then you go a date out to March 3rd, and now you buy two options, one at 157, one at 160. But that's not it. I mean, you can play more with that. You can look. I can make it into all kinds of shape. I just thought that this shape was pretty good, but I can make it so like if Apple has a huge run, I'm able to profit a little bit more, right? And minimize my down risk to just 33, but then I don't get to profit from this window. And that just brings me over to the next topic, right? Which is you want to play around with the options wheel. Like, think about how you got good at, let's say, using Windows or your iPhone. What did you do? Like, what did you do to get good? You were just playing around with all the apps, downloading apps, trying to figure out how it works. You go in the settings, you browse around there. Maybe you Google something up, okay? And then, you flip things around, like you click buttons. That's how I learned how to use computer, back in the day, back in the good old days. So it's no different, okay? It's like playing any sport. You just get in there and play. You play around. You check out all the parameters. You push some of the limits. Hopefully you don't click anything by accident. And you try things out. Hopefully you're playing around with small amounts as you're learning. But I think it's very important to have that play aspect. And, a lot of people clown on brokerages like Robinhood because, they're idiots. They trade cryptos and do all kinds of weird stuff, but they actually built a good, fun, like options platform that is easy to use, very understandable, and it gives you all the information up front. It's scrollable, like you just want to spend time on it. And so I think that's actually a very good thing for people to make it, to gamify it a little bit, so it gets them into it, gets them interested into how things work. Like if you watch the traditional media, like people are actually saying that it's a negative that investing is gamified, but I think it's actually very positive, because if it wasn't, nobody would be interested in it. They'd be out doing sports betting or whatever. So I actually think it's a very good thing, personally. So anyways, this is the strategy. You can play around with it a little bit, like try clicking different things to see what happens. Like here's an extreme version where I would lose quite a bit more, 122 at 149.58. So it's a lot, but the payout is also a lot bigger too. Okay, at 155 I'd be up 165. Okay, and all the way to unlimited here in the 160s. So there's all kinds of stuff you can try. Personally I found this one with the minimal amount of risk and most amount of chance for reward. If there's a green week, that'd be great. You can just let this strategy run to expiry, or you can exit it early if you feel like you're profitable. So there's a lot you can do here. If you're wondering about the account, since I don't do as many updates anymore, this is what happened last Friday. No, Friday. Yeah, Friday was tradable, right? President's Day. Today is off. I did mess up on the last video. I said I was going to put on a trade on Monday, but obviously Monday's President's Day. Markets are closed. So I'm probably going to put it on tomorrow for a couple of days and see what happens. But the account's been doing fine. It's basically a flat week. up $800 or 0.6%. It's going to be fairly flat from now on since I'm not that heavily leveraged anymore. I have some cash sitting around collecting interest very slowly here, and only really have three positions which are not very very volatile. I mean, Apple is the biggest ticker out there, so it's not very volatile. It's more volatile than the SPY, right? The S&P 500, but not more than most stocks. And then these two stocks are fairly stable. They only go up like 15-20% at the most, up and down, unless there's something extraordinary going on in the markets. So these are all the accounts. I am keeping track of Smith and Wesson, and I'm definitely watching it. It's on top of the list. If you guys are wondering, like if I'm still interested in the company, yes I am. All right, so that is the account. Try some of these options. I really encourage everyone to just really just play around with the options wheel and see what kind of strategy they can come up with. Learn to read that profit and loss chart here at the bottom right when you're doing options. Okay, this chart right here. So it tells you like, okay, how much you're gonna make if what happens, what the hell did I buy? 250, but 250 call for an expiry next week. Yeah, that's gonna print. So, it tells you the maximum drawdown at what price. You can just kind of scroll forward and back to figure out like if the numbers make sense to you, and then see if you can see if you can guess or estimate or calculate what are the chances that each scenario on that graph plays out in real time. And that will give you the confidence to place the trade. All right. So that's all I got for you for right now. The markets are closed, so not a lot happening out there. But let me know what your favorite strategy is, or if you have a custom one that you'd like to do. And if this one has a name, please let me know. Otherwise, I'm naming it myself. You know what I mean? All right. That's it for now. Peace out.